The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. A lot to discuss because I think we're getting kind of to the end of this particular phase. Exactly a week ago, I was thinking that's where we would get the end of May rally, and then some part early June, we start to see some weakness, just some weakness. I don't see anything more than that right now. It could turn out to be, hey, more than that, but we haven't even really got to that. We've just started to see a little bit here with the patterns that we're looking at. So the Dow, it looks a little complicated, but let me just explain. So there are patterns that I look at. Let me just draw them in here. So one is the first group, and that's the group is straight up, straight down, cup formation, arch formation. Mix of 1 and 2, 1 and 3. 1 and 3 would be the red where you fail at a peak B and you test the left side low. It's a dreaded H pattern. And the reverse green, very positive green Y, is where you take out the left side high and you keep going higher. But in both cases, how you test the left side low is really important. And how you that's with the H pattern. With the Y pattern, how you test and break above the left side high is very important. That's number one. Number two is within the context of patterns, we look at this pattern here where it goes to a higher high, usually a DEF, and then you start to make lower highs and much lower lows. Then there's a base that forms, and all of a sudden, this negative pattern becomes quite positive because what happens? The price takes out the upper declining trend line from the cone pattern. That means you could go to the next high, left side high, and then all the way to the previous high. That becomes a cup formation. That becomes this one that we were just looking at right here. Click there. That one, right? So they all modulate on this straight line up or down, cup or arch formation. Aha. But what about the actual patterns themselves? Well, in the Chapman methodology, the idea is to try to identify the lowest bar or lowest trough, count each successively high after that, alphabetize them. A, if you get to B, there's a chance you can upgrade from a buy signal to a buy mode. If you get the buy mode designation, invariably you're going to go to at least D. You can go high, but D is your objective. D is where you can also have an instant restart. It keeps going higher, but D is your objective. It can go to E, F, and G, but at D you do an assessment. All right, so where are we? Using just those techniques. You went to D, there was an instant restart, and we haven't taken out the low of, in this case, 41,150, but you have gone sideways in a way that negates that. Then you had the Chapman falling axe formation, this lower highs and much lower lows. Then it turns into a cup formation, and it looks like it's going to break to the upside, and it doesn't. Therefore, now I have to draw in the potential for an arch formation. That's all this is saying is you can make it as simple as you want by just grabbing the outer levels, the high and the low, and just say, we're stuck in a rectangle formation until the Dow decisively goes above 43,100. Just make it as simple as possible. Below 41,100, but I'll say 41,000. There's a problem. You failed, and now you're going to take a breather. That's the Dow. Look, the S&P did something a little different. They always do something just a little different. You have to reassess. So here, it took out the 5968.61 high yesterday by going to 59.90, I believe it was. Let me just check. Why is it always so fuzzy on the right side? I'll do it in the down. There you are, 5990.48. 5990. So now we have the chance, 48. Now you have a chance of a double top. And look, at this particular point, that high that was made on the 19th of September, 19th of May, had a very strong MACD, strong stochastic, strong unbalanced volume. The retro strength index was strong, and now all of them are weak except the strength in the 914. As long as you've got strength in the 914, you've got to be careful because it's showing you that there's residual buying power. All right, but we've got the potential for a double top. But look at this weekly chart. Leg B, strong 9-period moving average, just crossed positive. MACD is good. Stochastics at 80%. Nice stuff. And the monthly chart is very good. QQQ, look at this. Now, this one, after you get to a G in the Chapman methodology, there's no H. You have to either restart, find out what's going on, or see if there was an instant restart. Now, just as I'm talking, it isn't Technical Monday, but because it's on my mind and I need to do it, I had questions about the instant restart. So very often, if you get 2 instant restarts, that's within 3 bars, the price goes above peak D and can actually continue high. If the MACD is very strong, you can continue much higher. Well, what came out with news today? I looked at it. Oh, 5. 5? Why did I look at 5? Oh, because it had 2 instant restarts. 5 is 5 below. It's trading up 10 at 131.57. Haven't updated it. Oh, look at that. This is a leg E. And look, 1 instant restart, 2 instant restarts from the low at about 50. And here it is. At 131, you've had 2 instant restarts, and this, I can't believe it, is the potential for a third. I don't think it makes it. 3 is so unusual. Wait, who? There was one that had a 3. 3 instant restarts. Give me 1 second. Did I ever write that down? I remember. The way I remembered it was summertime. Oh, pool. 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 That is pool, corporation, swimming pools. Yep, there it is. So the monthly chart, ugly, it's making a dreaded H. It's actually an H to an M pattern, retesting the lows. The weekly chart, not very pretty. Why am I looking at this? Pool? Oh, you've got to go back. That's why. I remember it now. There it is. So pool... No, it only had, there it is. There we go. So pool, once upon a time, it was the back of my memory. Look, 1 instant restart. This is from the low that was in October of 2014 at 51.61. It goes peak ABCD, instant restart, 1 bar lower, and the next bar starts a new recovery high, and all-time high, and then it goes ABCD. Was it before that? All I know is I remember this is the one because I made a joke. Someone in the den, we were looking at this, and I made a joke about the... Oh, there it is. That was an instant restart. I could have called it that. It went to an E, but it never took out the low. That's what it was. Okay. So, all right. So what I wanted to say is very seldom you get 3 instant restarts in a row. Okay, so within that context, let's look at GE. GE's done the same thing. It's 2 instant restarts, isn't it? GE? Yeah. It's only 1 instant restart with a leg D going to maybe a peak D right now. Oh, wow, this is going to be an interesting week. I'll be back in a moment. Yeah.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So let's just do this. So had a question about, I'll do this right now because I might run out of time. MG&I, Magnite Inc., advertising tech firm. So the monthly chart is improving a lot. The price pulled back very sharply, under 10. And the 9-period moving average still held like a spring, and whoosh, it comes back up. Leg B in the weekly chart, stochastic hasn't yet hit 80%. It's at 66%. On balance, volume's good. MACD is expanding, very good. 9-period moving average has been positive for 2 weeks, so that's all good. And the daily chart, so look at this. I circle this as a potential instant restart, but look how deep after peak E it went back down. So that just negates that. So I put a little X in it just to show you when we were looking at it just recently. Now what's gone is brand new peak A, B, F/B, G/C, and it went over the left side high in a beautiful time match. Look to the low from this particular level. I chose that on a particular candle right there. That was in February as a high. That was at about 16. It comes all the way back, and I used this plumb line to gauge whether or not it could come back to that level, and it did that using the Chapman Wave inside wedge dash green target resistance line. MGNI is a symbol, trading at 17.44, up 76 cents, and went right to there. Look, let me click this on, and you'll see. It went to the one bar early from the target that we had back on the 28th of Feb at 1637. It went to, actually it did it a few days earlier. It went to 1659, pulls back, and then it went to 1686, pulls back at a G/C. And remember, I always say, when you get a peak C, and there was a chance of counting the 9-period moving average holding all the way through with this new buy signal to buy mode, treat it as a G/C, because invariably you go to a D. Well, you went to the D, except you pull back for 3 sessions to the 14-period moving average, 9-period moving average, and you've been rallying, but only today it's 1, 2, 3, 4, 5, 6, 7, 8, 9 bars since that. No, it's 9, 10, 11. 11 bars since that peak D to make a new high. So I do the same thing. I treat it as an E/C. There's nothing wrong. I'm just notating in Chapman methodology. Just say, just got to be a little careful because you could start to pull back here. But you've tackled this candle. And this is the inverted Chapman wave red Roman candle, which has a high of 1839 and a low of 1654. Today we've gone to 1681 was the low, 17.52 is the high. So we're getting into this candle. So this is the candle, and all I'm going to say is if any day it starts to trade above 18 for more than 60 minutes, there's a really good chance it's going to test that 1839 level, acting very nicely. Yeah, the market's kind of weak, and it's up 83 cents at 17.51. So I like it very much. I'd go step by step. Most importantly, what you really want to know, where is the support? Well, right now the support starts off right here. It starts off at the 9-period moving average of 16.53, and then it goes to the 14-period moving average of 16.15. But I'm going to just say, if over the next 4 sessions, Tuesday, no, I'd have to go to Wednesday. If by Wednesday it has not closed below 16.15, but in fact is tagged 18, that really improves both the daily, the weekly, and it's a Magnite Inc. advertising tech firm. Very, very good. So congratulations. And what I did want to say about this is that in the advertising area, some of the advertising companies that I follow, IPG, let me just see, I haven't updated it for ages. IPG, it's a different kind of, at the lows. So the fact that this is acting so well is very, very important. So congratulations. You've been in it for a little while and you wanted to see whether to add or not. I like it. Would I add right now? I'd probably say yes as a trading position because you're already in it. Normally, I would say don't add if you're going to make the average of your entry prices if it's going to deteriorate on a sudden slide. But in this case, I'd say at 1752, it needs to work. So if you're 17, I'd even make, what's the low today? 1681. No, I wouldn't even go there. I'd say add in a trading position at right now 1752, but this particular add-on must have a fairly tight stop. I don't know if I'd even go down to 17. I'd make it 1725 and make it as a trading stop. And it's just, this is the trading position. This one you're going to take off soon, but not yet. Hope that helps you. Let's go back to our story. Gold trading unchanged at 3,400. GDX had a really nice, strong move. So this is a chance of an instant restart. Going to, at this point, I'm just putting in an F. I don't have to make it F in my mind. I'm thinking F/B, but I don't have to type that in because it's still very strong. The 9 is strong over the 14. The MACD is very strong. The relative strength index is good. It's not strengthening, but it is good. And the stochastic's flat at 94%. That's what you want in a buy mode. And the on-balance volume is very, very good. And that's the daily. The weekly chart has gone to leg D. Wow, look at this. I did this some time ago, but I haven't updated it. Should I do it now? Do I take time? Well, I think a lot of people are in gold, so I'll just do this. Here's the GDX. Where would I take a midpoint? I take it to a particular candle unless it's really obvious. I like to, if I can't make it obvious, then I'll choose just the tiniest candle right there. Would that be a halfway marker? No, that's not a halfway marker. No, that would take me to there. I have to go further along. Let's go to this low of the 20th. This is a monthly chart of September of 2018. So let's go to that low right there. there. No, it still doesn't work. All right. So what I like to do is I like to say, if you can, bump against the Grand Canyon steep slope on the left side, going right past the peak. That's what I like to do, and I'll do that right now. So I'm using my technique that says there's a chance that you can get it from a particular left side. You can get the number of bars on the left equal the number of bars on the right. In this particular instance, I don't want to force anything. I'm just saying this is a potential because I need to have a guide. I need to know where it could go to and in what time. So this is pink because it was all negative. This becomes green. I have no idea whether this is going to work for me. Right there. Oh, well, that went to this high that was made right there. So that's not going to work because it needs to go a little bit further. I'm not going to do that. I am going to say that gold right now is trading at, the GDX, I'm sorry, trading at 53.84. But the target, the big target, I had this some time ago, but I maybe I just took it off for some reason, was 55.25. So that's kind of the area that I'd be looking at, and it should be, well, it's already 2 months late, but that's the area that I'd be looking at. I hope it helps you with the question of where would I look for some kind of resistance. That would be the place. I'll be back. Basil Chapman. Dow is now only down 51. S&P is down. Oh, it's unchanged. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
So just to follow up, I had a question about SLV. Actually, the one called SILJ. Let me just see if I've done that. SILJ. Yeah, I have. All right, so SILJ is the junior silver minor ETF. So we've got this as an E. Now, this could be an instant restart. Look, after 2 bars, it makes a new recovery high. So this becomes an instant restart. So I automatically think, I don't have to put it in, but I think alternate count. So this becomes an E and an F. I don't have to do anything. The 9-period moving average is fantastic. MACD is good. Stochastic's flat at 97%. That's fabulous. So this broke out. Now, that's gone to a leg D. Just this week alone, just look at this huge spike. Now, it's gone above the previous high, about 1520. Here it is at 15. The high today's 1553. And the monthly chart, in a shorter period of time, 2 months, shorter than it should have been, has gone to a D right there. That's very important. So I can look at the left side high right there. Yeah, so the next side high is very much higher. Look, it goes all the way to... this is SILV, to 18, where was I? Right there, 1817. And then the high, the major high that was made, also with the left side, right side price time match, but it failed to get there, is the high of February of 2021 at 1884. So I hope that helps you. Now, it's not important for me to give you the highs, because once it's in this explosive move to the upside, we don't know how high it's going to go. We have ideas where the resistance is. Most importantly, look at the gap from yesterday. So this is the second gap in 5 sessions. Now, a silver trades overseas, so anything can happen. What I am going to say to you is that within the context of gold and silver and gold, and they rotate through favoritism, and then they both go up together, and then one takes a breather, the other one follows through, and then they both try to rally, but they fail. We haven't got to this third phase yet, where gold suddenly says, hey, silver's even beating me, I need to catch up, and they both try to rally together, and within a couple of days, they come down together. I haven't got there yet. And the on-balance volume is only a clue to say we're a little bit overbought, but that just says, wow, if we might not fill the gap, we might only go to 1475 and then go on to another high, and it might take up until a Wednesday or Thursday of next week before we actually start to break below yesterday's low of 1421, and that's a big move. It's a huge move up, but it's also a huge move down. But it has to be just as something that just knocks those metals for a loop. Let's go to high-grade copper. High-grade copper is trading up nicely. It's up 12 cents at 5.007. It's been doing this cup formation. I thought I drew that in. Maybe I drew it in with SCCO. I'm not sure. But I remember looking at it and saying, hey, draw that in as that reverse Y pattern. Yeah, we've gone above that left side high. That's very important. So high-grade copper is finally moving nicely. SSCO, yep, this is made. So that's a peak C. But this is your starting point right here. Right here. That's your entry point to start a buy signal and then upgrade it to a buy mode. So every peak gets counted in the Chapman methodology. So this peak gets an A, a gray A, because I'm not going to change the color right now. That's a B, right at the 200-period moving average resistance. And then what happens? It can't get as another A and a B. This is getting to be like a restart. Chapman restart is very, very positive. And then what does it do suddenly? No, I made a mistake. That was 94.20, and this is 94.20. 30. Haha. You see, when you do this enough times, your eye just picks it up in a second. So we've finally gone to a leg D. And it's a nice D, but it's kind of a doji candle, up 19 at 96.93. This is Southern Copper. Then I had a question about TGB. Taseko Mines was on our list for my subscribers. I chose something else. I chose CDE. Out of the metals, I chose the silver stock, way down, 782. So way down in under 8, and it's trading right now at 963, up 7% just today alone. So TGB is a very low price stock. It's trading at $2.60, up 12 cents. Leg D, and is broken out of this major downtrend channel right there. Yep, it's a channel and a trend line. Well, the week is still young, but on the weekly chart, it has broken nicely. So the next resistance level will be right here at 267. It's trading at 260 with a high so far today of 261. Most importantly, if it can get into, this is a monthly chart, so on a daily basis, if it can close above 299, I got to be fussy about this because 297. If it's trading above 297 on any session in the next week, two, it doesn't matter, and then it can hold there into the close. This is one of those where I usually say 60 minutes now on a close. If it can close above 297, there's a real good chance it's going to test the high that was made back in 2024. It was, I think, July or something, May. In May, a year ago, just over a year ago, at 2... Yeah, I'd say 315. Yep, 315. So I should type that in. 315 May of last year. Yeah, so that's the way it is now. Let's look at the downside. If it closes at 260 right now, if it closes under, it doesn't have to just slip and then move up, but if it closes under this candle right here, that's the candle of yesterday, had a low of 239. If it closes under 239, it's going to have a rest period. But that's all, because what's really important about it, all the technicals in the daily are fabulous, and the weekly has finally gone very positive in the 9-period moving average. So this is very good. Okay, I hope that helps you. Next question came in. Got that. Can you up? I did that. Okay. I'm just looking at some questions. I did that. Okay. So a couple of questions I wanted to get to. Oh, one that I'm just missing right now. Just don't want to run out of time. Can I look at Oscar? Isn't it with an A? O-S-C-A? Or is it O-S-C-R? Oh. Nothing. Oh, there it is, Oscar Health. Yeah, we had this, looked at it a long time ago as one of those single-digit stocks, and now all of a sudden, look at it, doing very nicely. Come on, update. They are. The good candle today. So I'll need a little time on this. There's a lot to discuss. Meantime, the market's coming back nicely. Dow's only down 28. S&P is now up a point. I like that. Let's see. I got the E-mini right here. Oh, made a peak F and then pull back to the 1-minute chart. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, in technical analysis, what I've done for not years but for decades is I just like to take what is obvious. Look, here's a trend line. This trend line is just beautiful. I have a technique that I call the Chapman Wave Inside Track Propellant Zone or Repellent Zone. If it goes into that, in this case, it's a declining trend line, and I make a little mini channel. And then every time it gets into that area, it seems to be propelled, bam, up. And then it went even over the 200-period moving average. Then it went down, went above it. This is the weekly chart of Oscar. But wait a minute. There is a trend line, and that trend line can be repeated here, except for this, right? So that's kind of the trend line there. It went out of it, but that's okay. So if this goes right, let me take it again. Okay, let's move that down a little bit. If at any point Oscar on a weekly basis starts to trade above this downtrend line, and that would be in the 19s, and here it is at 15, let's call it 20, just 16 for the moment. 16 was the round number high today. If it can trade up in the 19s over the next 2-3 weeks without taking out this trend line down to the 10s, that's going to be really good. But look, the 9-period moving average was pink. It went green, and it's still green, even with that little dip. So that says the weekly chart is starting to improve again. This is Oscar, Healthcare, Health Inc., Healthcare Insurance Services. It was once on our list, and then I don't know, I can't even remember if we made any money or anything, but we haven't had it for years, at least ages. But this Chapman Wave falling axe formation, remember the pattern we were talking about a little earlier? I said this is a pattern that we follow. If it goes to a peak and then starts to make lower highs and lower lows with an expanding wedge, I call it the falling axe pattern, handle, lower, and the axe declining. This cone, if it takes out the top part, that's going to be very good. Well, make it as simple as possible. If it takes out, so far this is a really good action. It's up 1.76, up 12.3% today. So if it's able to hold at 1628, 1632, and hold there at least for 2 days, and perhaps go a little higher, now it's overcome serious resistance. Now, normally I take the trend line and I'd go to the most hit highs of the bars right there. Well, today just took it out. So, okay, I'll use the same technique. This is a very positive technique, and I'll go to the next level. Well, I'll go to the body of the candle, not the high, and that takes us to where I was just saying. If I go to the candle high, and it keeps taking it out. That's fantastic, because now what you've got is you've got the falling axe pattern that goes to the cup pattern. What is the cup pattern? It is the reverse green Y. See, that pattern, there's the up line, there's your cup a little bit deep, but if it starts taking out this line, you're starting to look at that trend line. Okay, so, all right, so I like it. It's at 15. You know what I'm going to suggest, because it's acting so well in a market that's kind of hesitant today? I'm going to say, if you haven't started the position, I know that you look at these and you're judicious about how you put in stops. I would actually take a little bit of a position. It's really not a starter. It's just like a get your foot in the door position at 15.95, and I'd be adding to it on the move up. But you got to start looking at the resistance when it gets to the 18s. Well, if you're in here at 16, going to 18 is 2 points, that's fantastic. That's a great profit. So start a position, but I definitely, on this, even though it's just a nibble, it's just kind of getting your foot in the door, I would have a stop at about 15, oops, it's at 16.03. I'd have a stop at about 15.60. All right? If it shouldn't take that out in the next 2 days, because it's acting so well today. Okay, another couple of questions. Added to shorts. Whoa, I'm looking at this starting to move strongly higher. Look, you've got peak A. Oh, I didn't have a chance to talk about it. I was going to relate this to the General Electric's weekly chart. Look, this is a B, and this is a C. We're going to that left side high. Look, this is the line. I didn't want to move the bars to the right. But you remember, this was the midpoint. Yeah, we are. Look where we are. Bam, we've already gone to the 1. So I'm just saying that you might be right. I'm just looking at this and saying the 1 minute chart, 9 is over the 14. The MACD is good. Stochastic's improving at 75%. It looks more like it's going to higher highs right now, but at 59.89, the 59.79 200 period exponential moving average you got to monitor. But I don't know. I'm looking at this positively. Okay. Next question I had was if BYD. This is BYDDF. This is BID. I still haven't heard it pronounced. BID Company Limited, 8 shares, Chinese EVs and batteries. Went to a leg E in the monthly chart. It went to a leg E in the weekly chart. Went to a peak F and then turned around sharply from the 61.51 level on the 23rd. And it's trading right now 57. Yeah, I'd say just be a little careful. What is fascinating, because Trump and Xi spoke today, and yet the China iShares, that's the FXI, large caps, going to a recovery high at 36.68, up 31 cents. And it's trying to get, look, this is gray leg B. So it's really improving a lot. Isn't that interesting? So key support is in the 35 area. Okay, next question I had was XPEV. Oh, XPEV. Oh, wait a minute. No, I don't want to do all these today. I don't think they're worth getting a little too carried away about. This is Chapman designs, develops, manufactures smart EVs. Yeah, it's just having a bit of a bounce. I've been saying that I think this is kind of stuck. Look at Tesla. I mean, when you're in, you're in. When you're out, you're out. 367.71 with the 356 open on the 29th of May. I said, be careful, that's a peak F, a leg F, and the next day we pull back, it's a peak F, and you've broken all key support levels. It's at 318. If Tesla gets to 308, it's at 318 right now. Then in the next week or so, you're looking at the 200 period moving average of 296 as being a potential. Now, let me just go back here, because maybe that was correct. Oh, okay. All right, so the little E-mini it's only up 2 now, but it's holding. Look at that 9-period moving average. That magnet of the 200 period moving average has dragged it down, but it's not fading yet. But I'm watching this very closely. So, all right, now, next question I had, okay. Did that. I did that. Yeah, so round numbers. So look what happens. GE makes a round number the other day. It made a round number I took it away because it was, once you go above it, it's done. It was 246 was the high on the 28th. Took it out. It had a high, where was it? Oh, it was intraday. That's right. It had an intraday, but it took it out. So here it is at a potential peak D. Is this going to be the second instant restart? No, I think these are getting very tired. Look, stochastic's fantastic at 95%, but the on-balance volume says, might be ready for a little bit of a dip. Yeah, we'll be looking at this over the next 2-3 days to see, because I treat it as a clue. Hood is the other clue. Oh, isn't that strong? Look at that, 75.90. That had a round number, and it took it right out. Yesterday's round number was 73.00. Here it is. Fantastic. Now, that's a break in the weekly chart. I'll talk about when we get back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
A quick question about CERN's call, CERENC, I believe, Inc. It is CRNC is a symbol trading at $9.50, down 22 cents. This bar today is a pity because if it held just a little bit better, it would have given me a beautiful cup formation to retest the high of 10, around about 10.50. So it can't go deeper than this. If it goes deeper than this, it just stalls and it's going sideways. And it means if it goes under 9.18, even if it doesn't close, if it just dips under, that's not good. Right now, what I'd be looking at is it's holding okay, but it needs to get, by Friday, rather than dipping, it needs to get over 10. If it gets over 10, there's a real good chance it'll break the high of yesterday of 10.33. 35. If it can get anywhere into that area, it says going a little higher. Right now, I think it's just kind of stalling. The weekly chart says, wow, it was once in the 26 area, and now it's come all the way down to the 6s. This is not so good. All right, so let me just do this as we're going to wrap up. I just want to go to this, just show you something very interesting. So the big spike that we had earlier on, because there was news about China and America, went all the way to the 60-19-ish area in the E-mini, and then it comes all the way down underneath 59.60. Now it's trying to rally. I'm just going to do this now. I'm going to use both down the S&P. If later today, by 1:30, if after 1:30, the Dow is trading is now up, it's barely unchanged. If it's up 90, 80 points or more, that's going to be very good to close higher. It needs that for this particular chart. If it's down 40 or 50 points at 1:30, it says, nah, it's going to just struggle. It's not going to work. But what's really encouraging is that the S&P has a different pattern. It's now up $6. If it's able to get today's high is 59.89, if it gets into the 59.90s, 59.90s by 1:30, that's going to be really positive. I'm looking at this, and the SMHs are telling me that buying is coming. And look, the SMH is up too. We actually long this position. Anyway, have a great day, and check out my opening call. We've had some really nice positions.